Hey everyone, wanted to film a quick video to share with you some investment trends that were going on this week in the market. So these will be weekly videos that I post to discuss what's going on in the investing world and how this may impact your portfolio. So let's go ahead and dive right in. First and foremost, Bank of America Research is now predicting a soft landing as opposed to predicting a recession occurring in Q1 of 2024. They're anticipating that the Federal Reserve will increase interest rates one more time in September before pausing any interest rate increases. They're also expecting that we could actually see interest rate cuts as soon as Q2 of 2024. This week was a big week for retail sales. So a lot of retail companies reported earnings this week. Some of the big companies we saw reported earnings. Couple of trends. First and foremost, they did see that retail spending actually increased. It was 0.07% higher than what analysts were anticipating. Some of the winners as far as the earnings calls go were Walmart, Home Depot, and TJ Maxx as they beat expectations. And lastly, one of the stocks that was hit the most was Target. So Target came out and said that they did see a drop in sales. They do think that some of this could be due to the boycotts that they saw in some of their stores across the country. Another investment trend for this week was fixed income. So a lot of investors started to look at fixed income as opposed to stocks. So the stock market was a little bit sluggish this week compared to what we've seen. In fixed income, the yield curve remains inverted with the 3-month and 6-month treasury rates around 5.2%, and we've also seen the 10-year note closer to around 4.2%. So this inverted yield curve has continued to tighten the gap between the risk-free rate on stocks, and that has caused some investors to start to sell their stocks and move money into fixed income. Lastly, a report from the Wall Street Journal anticipates that funds are starting to raise millions of dollars and look at distressed real estate properties. So what they're anticipating is there are a lot of investors that are gearing up funds and will be applying these towards big commercial properties. These aren't just office properties, which have seen as much as a 70% drop in value, but they're also looking at some large apartment complexes, which are losing tenants. And with the interest rates remaining high and potentially remaining higher for longer, a lot of these big real estate owners could start to default on their loans. And we've also heard from banks that they are not as willing to lend to these big real estate companies. So what this could lead to is a lot of private funds or investment funds raising money and going in and buying these distressed properties. So there's a quick recap of what was going on in the market this week, how this may impact your portfolio, and some of the investment trends that we're seeing. I hope you enjoyed.